watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everybody. Welcome to Master Trader Live. Today we're talking about red candlesticks, and we're not to get scared. Red candlesticks happen in uptrends. And when we start out in this business, first we get inundated with too much information about everything, including candlesticks. A lot of that information is misleading or outright wrong. And we kind of add fuel to that fire with our own opinions in trading. And when we start out, look, we're novices. And so that little bit of information, we're all over the place. So, prices could be in an uptrend. All of a sudden we see a red candle. Oh my God, what happened the last time? The prices went down. Forget about money management. You didn't even know anything about that yet. You lost half your account. And now you've done some psychological damage to yourself. No one knows but you. Certainly not your better half. Keep that from them. And hey, we take that into the next trade. And now things look good. We've educated ourselves a little further. And it should be sound. And from there, we start projecting things into the future that aren't reality. So we're going to talk about some basics today about how is a candlestick constructed. For some of you, that'll be beginning information, but for some, not. And from there, we'll build onto that into what I've coined bar by bar analysis. And bar by bar analysis was something I created many years ago to keep my emotions in check. Don't be scared of red bars. What does that red bar mean in the context of what preceded it and in multiple time frames? Is it a warning or is it just normal? What should happen next if I see a red bar? So all of this guides our thoughts. Type in there for Amy. One sec, guys. Okay. So with that being said, let's get going. We got a bunch of slides. Dan's here with me, and we're going to teach you some good stuff here today.
As always, great introduction. And, Greg, you hear me saying this a lot, that this is going to be such a game changer, moments, because it's happened to all of us. And I remember I got this title because you were talking to, I think Debbie, and there's somebody in the green trading room. And it is so real of we're in a bullish trade, the first red bar, you're wanting to panic. And you're like, there's nothing to get scared over this bar. It's the normal ebb and flow of the pattern that we entered. So this is going to be a valuable lesson today, not only to determine many things. The trend quality is going to determine the quality of setups. It's going to be very important on trade management. I would say this is very, very integral today's subject to our pivots for exits and objective trade management. Don't use emotions. Let's use what we're going to share today to come up with an objective reason. Is that red bar okay?
Right.
So we always start with this foundational slide because this is our approach to technical trading. And it's all of these concepts put together that make up our method. And this is right out of Greg's swing trading course, all these thought building modules, put it together, and that's our approach. That is our daily factory work on what we do and looking to trade anything that moves.
And the key there is thoughts, because as technical traders, when we look at charts, it creates thoughts. And is it going up, down, or sideways? And what you put on that chart is your reality as a trader, whether you're a swing trader or a day trader. And of course, you know that's just separated by time frames, but the patterns are universal through all time frames. So there's choices as to the time frames that we're going to utilize, but all of these things that are listed there, support, resistance, trend quality, multiple time frames, so on and so forth, they create our thoughts. And what happens is that your mind obviously is like somewhat like a computer, not exactly, because it doesn't just look at things black and white per se. There are those gray areas, and there's lots of gray areas with technical analysis, but your trading plan based on these objective pieces of information will guide your thoughts. So with candlesticks, we see topping tails, bottoming tails, red bars, green bars, and sometimes they just look like a mess. But other times they make beautiful pictures. And so they guide our thoughts on a continuous basis along with these other concepts.
Perfect. You've spoken about this a little bit just in your introductory comments, but a Japanese candlestick, well, we'll define it in a moment, but this is our approach, and that we just went over on the last slide. Putting all those concepts together, you can see here, we aren't showing you the time frame, we aren't showing you what this is. This could be a Bitcoin, it could be Facebook, it could be a bag of rocks. But every candle formed on this, whatever it is, and on this time frame, it is giving us information. So Greg and I could tell you, we could go bar by bar, we could look at the patterns, we can put all our concepts together to make very intelligent decisions on what we think the probability of this issue is moving up, down, or sideways. And so this is, Greg coined it here, candle language. The arrangement of all these bars is speaking to us.
And it changes on a continuous basis, but bars change. That doesn't mean a trend changes. And so one bar doesn't change a trend. One bar can influence the probability of a trend continuation. And so when we look at different red bars, well, they different sizes, they form in different ways. They can have different implications, which we'll get into. So,
and so look at, you can start with the heading here and then continue all these fancy names, but focus on the title here.
So all of these names, and there are more depending on where you go look, whatever book, whatever website, and all of these names are defined by that pattern where, kind of bar it is, where's the open, where's the close, how far did it retrace into a prior bar, how many bars make up that particular pattern. And in reality, all of these names, while there's a lot of hype around them, you don't need to know them. We'll explain further, but it's going to be a big step in your learning process to be able to remove part of the time requirement, because you could spend days or weeks memorizing these names, which will not make you money. They will actually deter you from that, because as you understand candlesticks, as we're going to explain it, all of this is meaningless. Let's go.
But Greg, you got to admit, if I told you that I made $800 on trading the 3 white soldiers today at happy hour, you would be impressed, no?
100%. Yeah, I mean, but that's the marketing thing that gets everybody, which now that you remind me, Dan, I wish I had the link. what I shared pre-market, I guess I think it was Monday. I think it was Monday.
And
One of these scams, a couple of them, this website, ragingbull.com. I don't have no problem saying it because it's
public.
news. Go check it out. Scammers, these guys, I don't know if they're arrested. They've been sued by the government. They are the next one that the big marketing, oh, you're going to get rich, online trading academy, millions and millions. Now these guys, the government is coming down on these guys. You know what? I guess they're Republicans, but I don't know. The government is coming after people that are leading people down the rabbit hole, lying to them about all the money that they're going to make. Now, we're not saying you can't make money, right? But we're saying, Dan and I say, look, there's a learning process, and that process takes time, right? You're not going to turn on the computer and you watching my 30-minute webinar, you're going to start printing money Monday. Doesn't work that way. And so I'm happy to see that the government is finally doing something to help the public and really help the public and take down some of these people that are, marketing this stuff and really giving the industry a bad name.
Yeah. All right, so we're going to start with basics and then build on it, like always. This is what a Japanese candlestick measures, shows. It has four different numbers. And again, any time frame, any instrument, it doesn't matter. These are definitions. The real body, which this is green, it shows the opening price of that bar. The close is the closing price of that bar. If it's above the open, it's green. The bulls win. That's the message of the bar. Does that mean I traded? No, go back to the first slide. And that's what we're going to talk about today. These red bars of what the meanings are in the context of the overall pattern. Then we have the high and the low while the bar was being made. It's still moving around until the time frame ends. This one, the opposite, opened here. In these, you got to visualize how this is happening. And it's all based on an imbalance of supply and demand. So Sam just mentioned Expedia here. We'll look at it when we go to real charts. And I typed to him, I said, that's a wide range igniting right now. It's a bar that looks like this on the daily chart on EXPE. So whatever's going on in Expedia right now, 99% chance it has to be news. The demand is overwhelming supply, which is creating this big fat green bar. So let's continue. So now we're going to keep adding to that. So Greg, tell them why you don't need any of these abandoned baby names, whatever. We know what this picture is telling us.
Because look, is it a big candle or is it a little candle? Is there a tail on the top? Is there a tail on the bottom? Is it a small candle body, big candle body? So as we look at these, right? And by the way, on that prior slide, just to make note of, the most simplest things that someone that's new may be questioning. They don't have to be red and green, right? The green ones, some people make them white, and the red ones, some people make them black. I mean, they give you choices anyway. Red and green are what's most widely used, and that's what we use. So that's all I wanted to say about that, Dan. So on these, we look at candle ranges, right? Is it big or is it a small candle? Is it green or is it red? So something like that. Oh, here's a big red one with a little red one. And now there's a big green one. What does that mean? Well, we have to put in the context of the trend. But on this slide, what we want to take away is that all of these pictures here are telling us that momentum is slowing. And so in the context of this one, right, momentum increased, and momentum increases and it decreases on its own, however trading is happening. And We've had a lot of slowing momentum candles lately. I discussed that in the
Right.
pre-market, right? It was like, why is this market always having to have resting periods while it's grinding its way up? So anyway, when we see this topping tail candle, it tells us that sellers took control because it looked like this, and now it looks like this. But that doesn't mean I should do something. Right? I have to wait. Oh, what if it's followed by that candle? Okay, it's still not picking up momentum, so I'm waiting. All right, now I've got this bottoming tail candle. Buyer stepped up. It went down and it came back up. So that's bullish. I think it should go up. Hey, wait, it got back down. This is crazy, right? So that's a picture of uncertainty. Anyway, you get the gist of it. As we look at these, this is what leads us into bar by bar analysis as to, big red bar, topping tail bar, small candle body, but this one with a bottoming tail and so on. And we begin to build on that. So now you understand increasing momentum and slowing momentum. Our goal is to simplify.
Yep.
So topping tails, those are bearish. Sellers took control, right? So we had a wider range. Now, topping tails, as you can see, come in wider ranges, or sometimes we call them range expansion bars, right? And sometimes they come in a little version where you had a range contraction. So a topping tail, let's assume prices were going up. And now all of a sudden, we get this bar up here. Think about what that means. In an accelerated move, prices then continued to accelerate, and then they came all the way back down again. Sellers took control. Maybe it's going to start dropping from there. I don't know what's to the left. That's something that has to be considered. In addition, was this the beginning of the move? Or was this, part of a second or third part of a move? Now, what if, all of these what ifs is because things can change. What if this candle formed after doing this? Obviously not as bearish. Momentum just stalled, but on a much smaller level than extending the move as this thing did. And the same thing as prices go down. And then they pop back up again. And it's about retracements. They retrace back up. Now, if prices were going down, and they start going sideways, we think they're going to drop again. But what if this bar formed? Well, what happened there? Down. And in reality, while it looks as one bar, it went down and it came back up in a smaller time frame. In any event, that's short-term bullish and suggests that it should be able to go up. So we're really bringing common sense to utilizing candlesticks on a continuous basis that build pictures that tell us what is happening, and then at some point telling me that there may be a change in what is happening, which is called a reversal, and then continues to tell me what's happening right now, what's happening next. And in addition, there are times where it tells me, and a high probability, this is what is going to happen next. So.
And yeah, Greg, I always like giving the analogy because most of us have played Tug of War as a kid or work or whatever. So you have the bulls and the bears are the two teams, and they're pulling each other while the game is still open. And these tails represent, while the game is still being played, who is winning the tug of war game. So as Greg said, this bar here was a big green bar. So at that point in time, the bulls were winning that bar. And the Bears, the captain of the Bear team turned around and said, Bears, what is going on here? Do you want to get your butt kicked like this, or do you want to get in gear and let's get some selling going on? And they that's what we mean the sellers took control. Not only did they pull the rope all the way back down to the starting point, they then won the bar by pulling the bulls across the finish line, and now the game's over. So, I like silly analogies.
Go back 1 second, Dan.
See if that helps.
You like animals.
I do.
So Trevor asks, can you have a red bottoming tail bar? Of course. It's just the difference between the open and the close. This closed below the opening price. Now, if prices were going down and you got that, I kind of like it even better to trade above that bar's high as a trigger. And you can have green topping tail bars, which just means it closed above the opening price. So sure, we're just showing them there's the most bearish and the most bullish, but you can have, bearish but slightly bullish, right? But if it's in a downtrend, well, and it's at resistance, it still suggests it should go down. And you know what? As I'm looking at this, it's certainly possible to have this 3 bars together. That should be great if things are in a downtrend and at resistance, because now it's some time going in. Now I know sellers took control. They did it again. They did it again. If it breaks below that low, it most certainly should go down. Tony's saying, can you interpret a bottoming or topping tail as a sort of pullback within a bar? That's exactly what it is.
Right.
Exactly what it is. In a smaller time frame, this went down and it came back up again. And so there are smaller candles in here. I know they're all green, but there's smaller candles in here, and this could be a bottoming tail bar in a smaller time frame that is right at the bottom of that tail. All covered in the courses.
Yep. These are our pictures of bullish setups. We aren't talking about bullish setups today per se, but I still love showing this one because there's a few of our bullish setups that involve today's subject. Red bar ignored. When is a red bar fine if I'm in a trade? When is a red bar good for telling me information to make my setup even more powerful? And I'll just point out a few of them here. So this red bar ignored, the Bears won this red bar, correct? Correct. And they were thinking it was lower prices. And it was, as long as the other concepts and the trend, et cetera, support this as a bullish position, that's our red bar ignored entry. This is a red bar ignored breakdown failure, a failed sell setup, double bottom, made a new low, snapped right back. We're going to get into this right now with a case study, but a bullish 1, 2, 3 continuation. This is a beautiful textbook bullish inside consolidation, inside bar. So the meaning of that, we're going to drill it in a moment, is no, that's going higher. That's a red bar not to worry about. This ugly red bar was something to pay attention to. Danger, danger, got reversed the very next bar. All right, so we have 3 pages here, and Greg put this together a while ago, and I just think it is invaluable. So let's all pretend that we are in this trade, and we're now going to start talking about bar by bar analysis and objectively analyzing the meaning of the very next bar. This is going to be enlightening to you.
So I created this long time ago to make an example of how we utilize this bar by bar, because things change, right? Each bar that changes can some degree change our bias or opinion about what preceded it. So in this example, what we're looking at is to say,
And just to show them, we're starting with this pattern, a master trader buy setup, which is a controlled pullback in an uptrend and reversal. So that's where we're starting right here.
so the first in the middle there, we're assuming that it started higher, it gapped up. What should I think? If I'm long, oh, great, opening higher, nothing wrong with that. And so, as it says, as assuming a positive close, we have little reason to be concerned, none whatsoever. Now, of course, if you're a nervous trader, you're always going to be concerned. But the goal here is to calm down and just say everything's okay. Right? So we've got the green bar here, right there, and we've got this nice green bar, and everything looks great. Well, now here it gaps up. Somebody's taking some money off the table. Now, after it gaps up, well, if it fills the gap, maybe there's going to be buyers there. I don't know what it's going to do. You know, maybe it never goes down and it goes up, but on the close of the bar, it's red, which means it closed below its opening price. So now, how far did it close into the opening price? It just ended at the prior bar's close. So the depth of retracement was little to zero, which leads into the names of candlesticks, meaning, I don't remember my name, but there's piercing patterns. I don't know if that's up or down. Oh, there's dark cloud covers, right? So it has something to do with how far it retraced into the green bar. So I don't care about the names. I said, oh, it's basically, if I look at this on a closing basis, it went sideways. It was profit taking. Well, at this point now we're in, okay, what next? Where do we go from here?
And we know that people panicked out of this. Like, red bar closed under, I'm out of here. And they let's continue.
All right. So next bar, it gaps. Oh, we're up here. It gaps up, closes green. Perfect. That's what I would hoped it would have done, because you're supposed to have a red bar ignored, what we call an RBI.
In bullish patterns, right?
So it did exactly what it should do. We're going just fine. Right? Next bar. Well, it's an inside bar. It's got a little tail on the bottom. So it dipped down, and maybe this was red at one point. So if it opened here and dipped down and then came right back up again, there were buyers on the dip. And so now maybe it can clear those highs.
Right. So
the next one, red bar, it closed below its opening price. And it's a higher low. So what this tells me is that the buyers are beginning to increase their bids. I don't need to know how much. I just look at the bar and I said, oh, it made a higher low. I mean, a higher low, and it's going sideways here. It's consolidating within this move up. And that's all well and good. Now, at some point, it needs to clear those highs.
Right. I did, in fact, when we see bullish consolidation like that, Greg, provided, I love when you use the term, is it near its destination, which is its target. If there's still a price void and the bigger time frames look fine and there's no reason to get out, I view that as an opportunity to add to the position.
Yes. I'm talking to John on YouTube, who said he just got here late. And I said, I'm letting him know that that's going on his record. So you can take this one, Dan.
All right. So that's where we just ended. It gapped up. It's a gap breakout. And then it closed with a range expansion bar. So remember the meaning of candlesticks? It opened here, barely dipped down, closed at the high, and the range is greater than the prior 3 bars. So I'm back to full confidence, again, provided I'm not near my destination, of an objective, very confident hold on my long.
So Dan, again, about people that are with us, we have a lot of people here, and some of them, they don't know where you're going. So they don't know what the destination is.
Yeah, I thought I mentioned that the destination is the target where resistance is, which means you look to the left on whatever time frame you're trading, look to the left, and it has a way to go to its target resistance.
Right. Hasn't gotten to a point where other people are focused on the chart where they're looking to sell.
Right. All right, so that's the place where I said I would add closed at the high. I have no problem holding this to the next bar. If it's a swing trade overnight, the next bar again opened up relatively flat, no tail, closed at the high. I have total confidence. Bulls are in control. There's no bar by bar reason to get out of this. Did it a third one. Fine. I'm just sitting back managing it. It's fantastic. The next one, okay, it's an inside bar. It was unable to trade above the prior bar's high. Momentum is slowed. That's a fact. But is that a reason to get out? If it's not near its destination, the answer is no. I just stay in trail mode.
But now that it's created this void, if it trades under that low, maybe you want to sell half.
Without a doubt. That's in our trade management trailing pivots. Without a doubt, we'd be taking half under a prior bar's low because.
Yeah, go ahead, Dan. I'm trying to figure out the trading tools here that they give us.
Yeah, just got extended. We're down here, and we talk a lot about trailing, pivots, and sure, we'd be doing that.
Go back there for a second.
Sure.
So let's assume the next bar was this. I'm just trying to reinforce everything we're saying here is that this is reality is what could happen is that it's not at our destination yet. And it stalled this narrow bodied bar. And when it trades under the low, people start hitting the bid to take profits. But the next bar forms a bottoming tail bar and closes above its opening price. Well, that now produces the thought that it should continue to go up to the destination. Yep. So you all should be seeing where we're going, how powerful this bar by bar analysis is, how it continually guides you as to what is happening and the other concepts, support, resistance, trend, multiple time frames, all of that helps to create let's call it a healthy thought process rather than one that's based on fear and greed.
Yep. A couple of examples. This, we've done so many MT lives in the past, and they're all phenomenal. And this was one when we were talking about trend quality. And so I wanted to show you the traits of strong trend qualities because this is today's subject. In a bullish trend, these red bars, so everything we've just covered so far in the last 30 minutes, I hope you can see it right now. If not, review this video later. But first, look, this is a wide range expansion breakout. You're totally happy. Gapped up, closed at the high. I'm happy. Red bar, made a new high, but I have a higher high, higher low. It closed in the upper part. I have no problem. Little red bar, this is a fantastic example of these red bars should be ignored. It hasn't traded under a prior pivot low. I have beautiful rising 20 moving average above the 50. I don't know where my destination is, but got a little extended here, just looking at the distance from the 20 here and here. It could, look at all these tails. You can see the momentum is slowing right now. So Greg, I'll just ask you one question before we move on to the next slide. And this was a little bearish gap here after a big run. So that, it's starting to pay attention. What would you do with that last red bar, since that's today's subject?
Depends on if I bought here, I'd probably be thinking about selling. If I bought down here, I'd do nothing.
Okay.
I would be waiting, because if I bought here, I made a mistake and now I'm underwater, and now this bar is going to increase my uncertainty because, I entered wrong according to my plan anyway, if I had bought here for a swing. So at a minimum, I'm probably going to put my stop under this green bar or this one. I mean, it's a bad situation if I bought here. On the other hand, if I bought here, I bought above this high and I share sized it for down here, I would do nothing, because I've entered on a bottoming tail bar at support. And so this could just result in some sideways price action. I don't know what's going to happen. I don't know. So I'm just sitting there.
And but that's a good psychological point. If you can just say a word or two on that. This is our approach. We have high probability setups and we manage in between. But we both get the question, well, Dan, Greg, how do you know? And you just said it. I don't know. We're taking the information in after we get it and applying what we're covering here to make objective decisions in real time.
So a couple of questions Eugene asked, and I typed in the room, but others maybe didn't see. How do you know where the destination is? And I said, you look to the left. And by looking to the left, I'm looking, is there any resistance there? Which leads to why you do not need to draw trend lines. You do not need things like pitchforks and speed lines and Fibonacci extensions and VWAPs and all of this hocus pocus types of stuff. And when you see these webinars or classes or advertisements about Fibonacci and all of this stuff, I assure you, 99% of the time, their Fibonacci extensions, overlap symmetry, so on and so forth, will be aligned with support and resistance. So simplify things, look to the left. The psychology part is first having a method you believe in, and 100% money management, because even the best looking setup, poor money management, over, size position, it will play games with your head. It's just the way. I mean, when you know that you have a risk of being destroyed financially because you've taken on a position that is way too big for the size of your account, you're going to be nervous. I assure you. Otherwise, I guess you're just, a robot. But if you can, nobody wants a risk losing all of their money. So money management is so key. And, part of, the specials this year, a lot of our courses come with a free advanced money management seminar, which is the best that you can't even imagine how good it is. But anyway, it's so important, and it frustrates me that so few are focused on the money management and position management part. But candlesticks, oh yeah, give me that candlestick book.
All right. All right, a couple here, we can go through them a little faster because this is what I'm just showing you. A compelling pattern, expect red bars ignored. Well, on this one, on the other one, I showed you red bars ignored there. So particularly on a smaller time frame, if you're trading the daily, then these are noise, these red bars. So this was a beautiful gap breakout from a multi-week consolidation, assuming there's no resistance to the left. The move is just starting. And you could see here, it was a beautiful gap trade. That's where we found this, in the green trading room. If you're trading this 15-minute chart, then sure, you'd be taking stops and trailing pivots. If you're trading the daily chart, that's bullish price action right there. Another example, with Nike here, you can see we gave them to both of our swing advisory letters as a swing trade, a bullish 1, 2, 3. Look at all these red bars ignored on a smaller time frame. And, you know, it depends what time frame you're trading. Third example, same concept, bullish gap breakout over a red bar. Here's my gap breakout. Look at that. We call this an end of day base. It had a powerful move in the morning, and it's just consolidating in the upper 80% of the day's range. That's very bullish price action to give you the confidence to hold on to your daily compelling pattern. Our green trading room is phenomenal. We start at 9 a.m. Greg does market review. We look at these gap trades I'm showing you, open trades. We have our tier 1 hit list, answer questions all day. We trade together, we scan together. But what the best part is to me is you're watching Greg and me in real time, applying everything we show you here on MT Live every single day. You're watching us do it in real time. And Greg, you know, I'm watching the market sell off, and you were making fun of me this morning of getting nervous on the 15-minute bar. And yeah, we'll take a look at the markets here together in a few moments. Same concept where we can kind of wrap these up. Wide range breakout on a monthly chart. There's the red bar ignored, bottoming tail, consolidation. It's beautiful. 15-minute chart, same. If you were trading this 15-minute chart, it broke out. So this could have been a late day breakout here, but the market closed. That's red bars ignored there. If you're just trailing pivots, you would have ignored every one of those red bars. Another example, I mean, we could show hundreds of them here. This actually we gave in our ETF trader, this nice rounding bottom here on support. We bought it here, and we had traders, Greg, I remember, hey, red bar, should I bail on this thing? Like, no, we're trading the longer time frames, and these red bars are bullish price action.
Oh, Dan, let me just point out here that there are red bars ignored and there are red bars ignored, meaning how much do they really perk my interest? And by perking my interest, it really means, do I want to press the button to place a trade? So this red bar ignored wasn't ignored enough for me to want to press the button after this drop. Now over here, there's another bar. Now that's getting into more complex patterns. However, over here and over here, those really perk my interest because it's already moved up. It's cleared resistance. It's going sideways. It's building support. Note the bottoming tail bar right there. So just any red bar ignored isn't enough. Right? There's what preceded it. Was it going down? Was it going up? Was it going sideways? So little difference in red bars being ignored and what I want to do and the implications of it. David's saying, do you take volume into account in this red bar ignored analysis? I'll look at it on a daily chart, David, but it really doesn't matter that much to me. Volume is overrated. It's talked about a lot like it's a big deal. Volume is mostly about being aware of liquidity. However, if I see a volume spike on a red bar and then it turns green, that's good information. It's kind of secondary information, but the truth is that markets go up on low volume, they go down on low volume or heavy volume. And I've seen plenty of times where the argument was, oh, where's the volume? Well, it still went up. How many times do you want to see something go up without the volume content to it? So it's price that we trade, but you certainly want to know if there's liquidity that in the time frame that you're trading in. Is it better to buy the new high? Not necessarily. No. I mean, this isn't a new high. That's buyable. You went too far, Dan. You were on something else.
Yeah, I was on this one.
No, I was trying. I mean, it doesn't matter. It doesn't have to go to the end. We can get to some charts. We're getting close here.
Yeah.
Now, go back. Right here.
Okay.
The other one. Oh, you're going so fast. Stop. Right there. All right. So this is a buyable event right here. It went down. It's got a shakeout. It's got a little pullback there, a green bar and a bottoming tail bar. I don't have to buy the new high. Matter of fact, if it's traveled from the bottom of the base to the top of the base, I don't want to buy the new high.
Unless it consolidates and a price void.
Right. So this is a consolidation right there. And not only that, you've got a topping tail that was a little breakout that was ignored. So you can have red bars ignored. And there's a topping tail example that popped above the highs that absolutely created some uncertainty because the breakout traders are concerned, but it went sideways. So bar by bar analysis can be used in other ways than what we're explaining. And as you learn it, you'll see how powerful it is and how you can utilize it on your own.
Yep. All right. I hope that was amazing, like we said. And these are Greg will post a link here, but these are our holiday specials. And we have them in different categories, whether you want to be a directional trader, sell credit spreads, our full courses, but it's the best prices that we've ever offered. And we say over and over, Greg, we both get tons of emails. And I did one just this morning. He says, hey, I'm a professional musician and I found you all. I've been beat up with other people, the same old story. So help me get on the right path. And it's the same answer every single time. You have to start with an objective, systematic method and get the schooling, what I call the conscious competence. And then from that point forward is getting the seasoning on how you master any trade. And that's what our courses do for you, the courses and our advisory letters.
So some of those courses, like MTS, has the gap course included and the advanced money management course. But some of the other courses on one of those tabs, you'll click on it and you can see, like if you buy the swing course or the directional course, you're going to get the money management course for free. So it's a fabulous time to get started if you're ready to. But go to the link there and click it and check it out. It leads to other pages where you can read about the courses.
Yep. All right, so let's take a look at the markets here and answer any questions about something you might be in. And Greg, Sam actually brought up Expedia, EXPE. So, markets falling pretty good here. And Expedia had a beautiful breakout and holding relatively well right here.
Yeah, see what it looks like at the end of the day.
Right.
It's consolidating. It's got room to the destination, right? For those of you that asked the destination. Under the TC2000 scans, if you are a green room member, a member of one of our newsletters, you take a course, I will share the scans with you. If you're just an MT Live guest, then I won't. So we asked you to become part of Master Trader, and the scans are free. I don't think anything better than that. All right. So I'm being schooled on the subject today of BIGC.
Big C, no, big, B-I-G. And unless I'm wrong. But there's a B-I-G-C, that's a bottoming pattern.
Oh. Yeah. I would, something like this. I don't like these kind of patterns because I call them to be treacherous, but it's got the beginnings of a bottom. Wide range bar, there's your volume, hits resistance. So it's kind of a shakeout. So what I would want to see here, and what I'll do, something like this, I'm not even interested in it right now. However, I'm going to set an alert at the top of that red bar, because if that's a red bar ignored tomorrow, I'll want to buy it, because now this would be a bullish consolidation. But right now, I'm not so sure what it's going to do. BG.
Not bad at all.
It's a grinder. It's a grinder. It's not a correction bar. It's a bottoming tail bar. It didn't take out any low. It's an uptrend. I'm not crazy about it. Not something that I would pick, because there's so many other things to pick.
And it's at a prior high, and the market's nervous. You know, I'm always looking for reasons sometimes not to enter something.
So BA, at some point, right, we should get some red bar ignored here. It's consolidating. You know, it broke out of this sideways, vicious, nasty sideways trend. And so now, you know, we can either buy pullbacks or it forms a base, and we'll wait and see what it does. You know, if you got a green bar, if the next bar was a 180 and reversed back up again, then you could buy it above the highs. AMD was doing well this morning.
Right.
No, it's not, but there's nothing wrong with it. From a swing trading perspective, you know, you've got this pivot now, which means 3 higher lows to the left and right, and buyers should want to step up here. So right now it's consolidating at the top of the wide range bar. It's fine. Just a little messy. And solo. I don't know. Some news supposed to be coming here. I'm long this and thinking about kicking it out, tell you the truth. I'm not going to give it much more room, because it's a deep pullback. So we'll see. On YouTube, wants to know about, well, 2 things. Keys. Tim is asking about keys on 11.5, bullish 1, 2, 3, 4. 11.5. Well, it's not a 1, 2, 3, 4 because it's not breaking any bars lows, Tim. Right here. And it just continued to go up. All right. So with a 1, 2, 3, 4, as I defined it, it's either got to be at least an inside bar, but I'd want to see it break this bar's low. USDC. Who wants to know about Forex? Hold on. US CAD. Oh, there's a slash mark there. It's kind of weird. That little narrow range on a on Forex was trying to bottom out. And it's on some support. See if it trades above the highs here. How Tim said on the weekly chart. Okay, so Tim's talking about here where they had this little correction bar. I missed that we said on the weekly chart. All right, let's go back to this other page. Simpler to look at one time frame. And Amazon. Let's see if it's a red bar ignored tomorrow. You know, it's just moving sideways here. This, we've got the correction bar. It didn't trigger above the high. But let's see if it turns around. I think I have an alert there. Anyway. Identical. Yeah, Janet, I don't like this solo because one of the things is someone said the CEO is supposed to be talking this afternoon. And so you never know what might come out of their mouth. Hold on, guys. Too many symbols. Tesla. NIO. NIO. It's not ready yet. All right. Had a heck of a run. It's not ready yet. It's consolidating. And this needs to consolidate more. It's not ready yet. And try to get them all Apple. It cleared the highs. You know, if you're swinging this, there's nothing wrong with it. See, we'll even see what happens here this afternoon. See how far it can retrace from there. A couple more, guys, because we're into our hour here. FNV. Set an alert at the red bar, at the green bar's high. Traded under the low. It's in a downtrend. Start trying to bottom out. So I don't love those at all. It's gold. So GLD down today. You can see the weekly had a nice reversal. It's got some work to do, and silver actually looks better. You can see it came down to the low and reversed. TRX. TR. All right, I got it right. Stay away from that. There's the penny stock traders. You know, if you get it right, I mean, you know, big position, you make your money, but a lot of people that trade these penny stocks with big positions get destroyed and blown out. All right, guys, a couple more. I'm going to call it.
You're in the lightning round.
I know. I need bells and whistles like Jim.
Right.
I wouldn't short this as a swing. Probably better for a bear call spread, tell you the truth.
Right.
You know, with a topping tail and a break like that, because, you know, it is in an uptrend. So it's created this resistance area. So a bear call spread would be much higher odds than if you're going to short something, find things that are in downtrends. So this is fine. It's in a nice uptrend. Nothing wrong there. Now, this is a mess. The home builder supplies, XXX. I spoke about this in the weekend video with interest rates and home builders and such. Any of you that are an ETF trader or advisory letter, go and revisit. I spoke about this exact pattern and interest rates in the weekend video. So that's it, everybody. I think this was a really great one, Dan, and I hope everybody enjoyed it. We covered a lot of stuff that you can utilize in your trading even this afternoon and tomorrow. So with that being said, we will call it another one to put in the can, and we'll be back next week. All right. Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.